Hello and welcome to another video for myatmm.com. It's time to look for some transactions to track or some new positions to get into. So let's get right to it. So here we are in Thinkorswim's platform, and this is one of my smaller accounts. And I just want to start recording videos that showed more insight into how I deal with ongoing option positions. Namely cash secured put. So I have a cash secured put running on each one of these stocks. And so what I do, pretty much on a daily basis, also to give you some insight into, how I manage the portfolio on a daily basis. So I just come in here and I expand all of them. And what I'm looking for is I've added a column for extrinsic value. So basically just the time value that's left in each one of these options. And I just monitor each one. And when one gets below 0.1, when it gets below basically 10 cents a share, is when I will look to roll it into another position. So basically what that means is if the position is in the money, so here's a good example of Paramount. So I have a 1350 put on here and it's currently trading at 1120, so that's a couple dollars below my strike price, and it currently has about 11 cents of extrinsic value. Interesting thing is earlier today it had like 0.03. So I mean these prices fluctuate throughout the day, of course, but in any case, so earlier I was looking to roll this, but I wanted to wait and make a video about it. Of course, now it looks like it's gone back up now. So, but we're going to go ahead and go through the motions, and if I can get enough good credit on it to roll it into the future, I will go ahead and do it. So basically, this is how you keep the same amount of collateral making money without actually having to execute the option and make you purchase the stock. This is a cash secured put, so I basically sold a put option, and I started this one. When we go over to the myatmm.com, you'll see I've been running this for a little while. So what I'm going to do is just right click, and you'll create a rolling order, and by default it will automatically set it up to roll it one additional week forward. So you'll see rolling it, so the current expiration is March 1st. It is giving a proposed rolling it to March 8th expiration date, same strike price. So it's trading like at 1122, and here we are still making money off of a 1350 put, basically reutilizing that same exact collateral, so we don't have to throw in additional collateral to make more money. As opposed to basically what would happen is if we executed this, we'd have to turn around and start selling a covered call on it. But I don't want to do that just yet because this account doesn't have any more collateral to put into this trade. So I just want to make the most of this. Now, the reach is a point in time where you may not be able to collect enough premium for it to make sense. And then I would let the option expire and execute the order. So what I'm going to do is March 8th, I'm going to go ahead and move it out one more week. So we're going to go out an additional 7 days. Currently, for this 1 week edition, it's giving us a 6-cent credit. But if I move it out one more week, you'll see it bumps up to 15 cents. And what I normally look for is more than 1%. So basically 15 cents a share would be $15 I would get, and it's more, $15 is more than what it's currently trading at. So basically it's more than 1% of the value of 100 shares. So now it's at 16 cents. And I will also just play with this a little bit. So I'll even go out a third week. I generally don't like going out more than 30 days to 45 days, and that's just a personal preference. I just like sticking to that personally. Otherwise, I'll let it execute, and then I'll just sell covered calls on it. I don't like getting too far out into the future because you lose the power of theta decay, which is just the extrinsic value dropping rapidly. All right, so we're going to go out one more week just to see. Currently, it's at 16 cents. So see, it only bumped up a little bit, so that's not even worth it. So I'm going to come back to the 15th. 16 cents, still above what's currently trading at. So I think I'm going to go ahead and pull the trigger on this, and we'll receive credit. See the $1.30, 65 cents times 2, because you got to sell the other one. Or, oh, sorry, buy back the other one, then sell a new one. So we're going to go and place that and see if it executes. It says my price is 16 and currently trading at 16, so it should exit. Sometimes it does get stuck and won't fire off here. You could be patient, wait it out, but it could drop a little bit, or you could be impatient and do this. You do right click, cancel, replace order, drop it a penny, and do confirm and send again. And that fired, that executed. So now when these messages disappear, I'll come back over to the monitor, and let me go and just collapse all these other stocks just to give you a better view of this. So now we have Paramount. This zero quantity is the one that we just bought back, and then we sold this put, basically pushing the expiration out from March 1st to March 15th. So we pushed it out 2 more weeks, and we collected some more premium for that. So anyway, hopefully that will give you some insight into how to roll an order. Actually, since that did execute and fire, let's go ahead and go over to the website to track that. All right, so here we are on the website, myitwm.com, and this is the account that I have for this that's tied to the smaller account that I was just showing you. You can see we only got 11,000 in there. So we're going to come over to the cost basis. And actually, before I do that, let's come back over to the dashboard real quick. So for Paramount, you can see for Paramount, I have run four different transactions on this and collected $97.35 in premium so far. I'm pretty sure with this exact same put option. So, I mean, it's been trading for a little lower than $13.50, but I've still been able to roll it forward a week or two and collect more premium, more than enough for the 1% that I was targeting. So anyway, let's go over to the cost basis, and we will select Paramount from the drop down. And under puts, you can see that we had that previous one already running, and we don't have to create a transaction to close this out, so we can actually just go ahead and delete it. And then we're going to create a new position by clicking the new position button. The start date is today. We sold to open because basically we bought to close the previous option, and then we sold to open a new position, a new put, and it's one more contract. It's just that close operation, we don't have to track the transaction because Thinkorswim and Schwab roll it into one transaction, so we don't have to create 2 different separate transactions to do it. But it literally is buying the other option to close it, and we're selling to open another contract. So the expiration on this one is March 15th. So we got to go out another month here. It's March 15th. The strike price is still the $13.50, even though it's trading for $11.71. We can continue rolling this. And the price we got was 15 cents, was $15 a share. All right. And after we clicked save, it opened up this closing section here, but we don't have to put anything there. Rarely do we actually have to do that unless we roll it or we close it. The operation of closing it, you actually could pick closing the position or getting assigned on the position, or it expired worthless, or rolling position. But a lot of times you don't even have to bother with that because it doesn't produce. If it rolls the transaction and combines it like Thinkorswim does, then you don't have to go through this process to do that, but the software does support it. But in any case, when I clicked save, it put a proposed record down here, and this is just a temporary work area. It's not going to actually mean anything until it's being put in place so you can get like helpers, so you don't actually have to take this and type it into the description of the transaction you want to write. So it automatically does that for you. Not to mention, if you click this little hand, it will take the values from this proposed record and move them down, but it also pre-calculates any commission that you throw in there and any fees. And in fact, I just did that a little wrong because the fees are not 65 cents and not a penny. They are actually $1.30 and 2 cents. And it's $1.30 because it charges 65 cents for the buy to close, and it charges 65 cents for the sell to open, and then a penny for each as well. So I'm pretty sure I can just press this button again and it'll overwrite, which it just did. See, it overwrote that value. It was $14 and something. So $13.68 is what we actually pocketed off of doing that rolling operation. So go ahead and click save. And then when you click save on that transaction, then it moves it down to this transaction history down here. Now this is the permanent transaction history, and these are the values that it uses to calculate and sum up and aggregate all the collected premium or stock sales and buys that you do on this position, or on this stock symbol rather. So Now that I've added that to the permanent transaction history, you can see at the top this overall summary. We still own no shares. We still have that one put contract, which represents 100 shares. And the total collateral involved, meaning the total cash that we have involved in this transaction, is still the same $1,350 that we did on the original transaction. And when I say the original transaction, you can see all these other transactions that I've done. So started it back in February 8th was the first time. So you can see I did start off at $1,250 right here. And then what happened is I think it went up in price, so I was able to do a $1,350. And then the $1,250 buy was because it was trading above $1,250 at the time. So I didn't have to do a roll at that time. I could actually just buy it back for 5 and a penny, and then I turned around and sold another $1,350 put option and collected quite a bit of premium on that one. And now I'm back down to, so $1,368 is just barely above the $1,350 strike price, but $1,368 is way above the $1,171, which is what it's currently trading for, or thereabouts. This isn't live. It just updates like once or twice a day. So, all right, so that's the overall total for this position. And yeah, I'm going to keep on recording these videos as I basically go into the Thinkorswim application every day. I monitor the extrinsic value every day, and as soon as it drops or gets close to that 0.1 or below, that's just my personal threshold that I use to determine when I roll a position. And the reasoning being is I only roll it if it's in the money, meaning there's risk of it being assigned. And again, that goes back to why I look for that 0.1 or lower, because as soon as it gets below 10 cents a share, I just have a gut feeling that it's close, or it could possibly be close to somebody exercising that option. What that means is if they exercise it before I roll it, then I actually have to buy, I have to execute the cash secured put, meaning I have to take the $1,350 and buy 100 shares at $13.50 a share, and then I'll own the shares. So monitoring the extrinsic value at 0.1 or below is kind of the threshold I use to determine when to roll a position, basically to avoid getting assigned. Because I want to continue using this $13.50 collateral over and over and over again as much as I possibly can to collect more and more premium on this position and just do it over and over and over again. So anyway, like I said, I'm going to continue doing these as I monitor the extrinsic value as positions come up to be ready to roll, and record them and update you on those as it happens. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.